All right, good afternoon, everybody. Event Trader here. Just going to take you through the last 30 minutes of trading. Going to be joined shortly by Scott, and we'll go through some of the earnings plays that are out there and take a look at some of the macro data that we have coming up here in the next couple of hours. First, of course, taking a look at the afternoon action, and then we'll pull into tomorrow and what to look forward to tomorrow. With regards to the U.S. macro data, tomorrow morning, pretty quiet day. All we have is that June JOLTS job openings, which due out at 10 a.m. That used to get a lot more following when Janet Yellen was the head of the Fed. That was one of her key reports that she would follow. So unlikely to have much of an impact. Again, jobs just simply have not been a key story for the markets. In addition, in the afternoon, we'll get our latest consumer credit report that's for the month of June. That's due out at 3 p.m. Eastern Time. The Briefing.com consensus is looking for an increase of $15.5 billion in consumer credit. So it's basically the middle of the road from where it's been running the last couple of months. So not looking for a major impact from either one of those. It won't be as much of a focus on the U.S. macro as much as some of the micro and some of the different names coming out, and the overall job activity, or the overall market activity, I should say, in general. As we stand with that, we're sitting right at that 2850 level that we're talking about in the S&P, so that's going to remain key. Moving on to the international side, a little bit more of items of interest there. First, we're going to take a look. China that has its FX reserves. That'll come out at about 10 p.m. So just give us a little bit of a measurement of where they stand with the U.S. Treasuries and capital flow in general. Markets are expecting a dip in the overall FX reserves, which currently stands at 3.112 trillion, and they're looking for a move down of about 5 to 10 billion. I've seen estimates for, so a decline, which shouldn't be that much of a surprise. Basically, what that shows is money flowing out of China, given the recent reaction in the markets, the move in the yuan, and the overall economic climate there. It's not surprising to see some money moving out. Whether or not, I wouldn't be surprised to see a bigger move than that 5 to 10 billion, to be honest. So that's one item that we'll have to keep an eye out on and see how the markets react, but that could be a drag on overnight trade in China if it does come in a little bit lighter than expected. In Japan, a couple of items of note. We got some household spending due out at 7:30. The average cash earnings at 8 p.m., that's probably the biggest number, and we're looking for an increase of about 1.7% year over year. And then finally, leading indicators will be due out at about 1 a.m., so a couple hours later for that. And we will be getting a central bank decision from the Reserve Bank of Australia. They are expected to leave rates unchanged at 1.50%. They always have a pretty good read on the pulse of the economy for trade and commodities, particularly with China. So we will want to keep an eye out for the statement from the Reserve Bank just to get an idea of what kind of sentiment and color is going around from a central bank perspective. Then after China's FX reserves, Germany's probably got the big set of data. We were talking about it earlier following that big miss on the factory orders, but we will be getting industrial production and trade balance. Both are due out at 2 a.m. this morning, or tomorrow morning, I should say. The industrial production, that's expected to slide 0.5% month over month, so as we can see, another weak number, and if that comes in like a big miss we saw in factory orders, then that's going to raise some red flags and certainly drag on the euro and add to that dollar strength. And then we got the trade balance, which one piece of data is not going to change anything, but certainly of interest to the markets. Right now, we're looking for a surplus of about 21 billion, but exports are expected to decline about 0.4% on a month-over-month basis, and imports are expected to increase slightly by 0.2%. Then we got France's trade balance about 45 minutes later, looking for a deficit of about 5.6 billion euro from from France. And finally, the UK housing price numbers, which is due out at 3:30, which is expected to come in at plus 0.2% month over month. So the key items to focus on will be the China FX reserves, Japan's average cash earnings, and Germany's industrial production and trade balance. But overall, a relatively quiet night. So I'm going to pull Scott in here, and we're going to start talking about some of these earnings that we should be expecting. Scott, how are you doing today?
I'm all right. Things are a little slow.
Did you get that AC working?
To some degree. Yeah, I had a quote come in with the AC guy. That's always a fun thing.
Yeah. I mean, if I could do it all over again, I would go back into a manual skilled labor, and because I mean, it's just crazy the numbers that they're able to throw out at you, and there's really nothing you could do about it.
Yeah. Hey, before we could start, did you highlight the action in Teva, T-E-V-A? I'm getting an alert on this one from one of our analysts that stock's tanking here a little bit on pretty heavy volume. I don't know if there's a headline in Teva Pharmaceuticals, T-E-V-A. Stock's down about 4% since you started talking. Give or take.
Look, not seen anything.
Actually, it's been 4%.
But my initial guess is that there's probably a competitor out for one of the generics that was coming out with data, but I don't see anything on that line. I know Valiant reports tomorrow, so just a quick look at seeing much of a reaction in Valiant at the moment. Yeah, we'll keep an eye out on it while I'm talking with you. I'll have a running watch out, and if I see anything on the reason behind that move, we'll certainly point it out.
Cool.
But
that's fine. It's pretty nasty. Just went into negative territory, giving up all those gains from earlier.
Yeah, not seeing it, so we'll have to keep an eye out for that. But like I said, the initial expectation is that we're going to see some sort of headline for one of its competitor drugs.
Okay. All right, where do you want to start?
Hold on. Sorry, I was just caught up checking something out there. Hertz, ticker symbol HTZ. I'll get this up on the page now. They've obviously had a number of soft quarters. They've really run into a lot of competitive pressures coming from both Lyft and Uber. I mean, the idea of businesses were obviously a pretty big part of their business, and now instead of getting a car, people are finding it cheaper just to go out and get an Uber and have the Uber drive them around to all their meetings, which has certainly been weighing in on the pricing pressures for both Hertz and Avis, ticker symbol CAR. Avis will be reporting later on in the week, so these two could very well move in tandem. I did see that North Coast was recently out with an upgrade for the industry, saying that they thought business conditions had been seeing improvement. And Gabelli, I know, had increased their stake in the name back on June 4th, and Carl Icahn, of course, remains a pretty big player involved here. Now, the stock got hammered below its 200-day moving average following Q1 earnings, basically some mixed results that continue to see some pricing pressure. But there is the feeling that these guys are in a turnaround mode, and its stock's coming up to its 50-day moving average right around this 1565 mark, and is showing some signs of life. So this is one that I'd be keeping an eye out on if they're able to surprise to the high side.
Yeah, I don't know. It definitely needs to do something because it's in pretty awful condition on the charts.
Yeah, I mean, but that's why I kind of like names like this. You know, it's an 80 million float with a 29% short interest, and it's just kind of left for dead, saying that the business is out. They've had a tendency to see some pretty nice runs post earnings when they've been able to surprise.
Yeah, I mean, I guess so. So if it starts to break out over 16 and starts trading higher, you definitely might have that squeeze on. But bigger picture, you still have that big downtrend in effect for year to date that comes in play probably around 19. So I guess that's a good return, you know, if you get on board through 16 and it gets up to 19. But I think this thing's going to struggle below $20 for like a longer-term turnaround investment play. to the downside.
I mean, given the stock makeup on this, Scott, I would have to say that. I mean, let's say it pops up through the 50 and you get some shorts cover and it gets to the 100, then the 200, and I mean that could really set off a pretty nice flush there and really damage the shorts. But so that's why I just have it on that side, because then it also would potentially break that trend line too, right?
Potentially, yeah. Everything's potential. It definitely, like you said, low float, high short interest. It's a hated stock, and it can easily, like I said, let's see if it squeezes through 16. And then if it starts to react positively over 16 in the after hours or tomorrow, then you got your squeezes on. And like I've always said, the squeeze, you need a catalyst. You need something. Right. So until that happens, I'm not touching it.
Catalyst, right?
Usually, not earnings combined with technical levels. Yes, you have a great catalyst, but I'm not touching it unless it goes over 16.
Right, and then we'll want to keep an eye out on their pricing power there, and just any revenue growth if they're able to show that would be a positive.
Cool.
All right, next up is ticker symbol PI, which is Impinj. It's a telecommunication equipment provider. Last week the stock was hit pretty good. They came out with some early guidance, so that takes away some of the surprise on this here. And they also announced a potential audit. They're doing an audit review, so market participants are certainly going to be looking for an update on that. This is one that was a high flyer back in 2017 when it IPO'd, but since then it's basically been decimated, fallen from that 58 area all the way to that 1892 level that it's trading at the moment. So, but they are fighting right around the 200-day moving average, and I know that they bounced back after it was their Q1 results, which came in a little bit higher than expected, which had people talking about a turnaround. However, last week's guidance kind of took that off the table. So, Scott, I don't know if you've played this one in the past. I know Tech T has been out on positive on this one here. It'll be interesting to see what kind of results they could put out. But perhaps more than anything, people are going to want an update on that potential audit.
Yeah, I know Tech T definitely has been talking about it for a couple months now. I think he just went out recently too, just saying that he's hoping to get some sort of positive headline coming out there in earnings that will, confirm his thesis of this being a big turnaround play. Overall, if it's weak, you got that gap from May, the last quarter's earnings report looming in right along $15. So that would be my line in the sand if I was looking at any sort of investment play. And to the upside, this is one of those low float, high short interest names. So it could get a pretty significant pop if it starts to trade back over, say, $20. This thing could probably squeeze up to 25. I mean, it's only got 20 million shares on the float.
Yeah, I was going to say, for the users out there, it's 20 million float with nearly 30% of it short.
Yeah, so you can definitely get easily a 5-point squeeze, 6-7-point squeeze up to that $25 area. I'd keep it on the radar for something like that if the report is good. Otherwise,
a lot of big ifs. But again, the problem with something like this is they already got it a week ago, so you don't really know how much of a response it's going to get to that report. As I mean, the surprise has been taken out of it at this point. I mean, granted, it was a bad surprise for him, but.
Yeah, all right, we'll see. I don't know. Is the theme here, now that we're moving a little bit deeper into earnings season, is the theme low float, high short interest?
You're seeing a lot different charts and a lot of different stock makeup. That's
yeah, okay. All right, what's next?
I mean, that's just a tenet. I always call this like ham and egger season, because you kind of get some of like I don't want to say weaker company names, but certainly a lot more on the speculative side.
I like ham and eggs.
Yeah, well, I'm not saying ham and eggs is bad, but definitely not like the higher quality bellwethers, that's for sure.
I got you.
Although here's a chart that looks pretty nice, and that's Tenet Healthcare, ticker symbol THC, which is a hospital name right up around its 52-week high. There's been some M&A activity around the space. with LifePoint being picked up by Apollo Management. This is a 99 million share company with a 13% short interest, again falling into that theme. But these guys have had a pretty nice little business going here. They still will need a pretty strong quarter to break out, but if you look back in that early May time frame, that's when the company was just trying to trade in a sideways pattern between 24 and 25, posted a solid earnings, and that really sent it up to this next level that we're looking at the moment.
Yeah, if it gets over 40, that's going to be pretty huge for this company, so that would be my upside resistance on this one, put it into that $40 realm. To the downside, yeah, it's just strong uptrends. So usually, more than likely, strong uptrends are defended on weakness. So take a look at that 50-day moving average right around $36, which is lining up with the gap from 2 weeks ago. If there is a little bit of weakness there, if things get a little bit more out of control, say for about a 10% drop or so, maybe even 15% drop, you'll be looking back around the May and June swing lows, right in that $32 area.
All right. Next up, a name that we could have the earnings come out and then have one picture of Oprah come out, and the entire move could be eliminated, and that would be Weight Watchers, ticker symbol WTW. The stock's looking a little bit heavier these days, although it is holding up around that 90 area for the last few weeks. Basically, what? Yeah, no pun intended.
Yeah.
But it's basically been straddling its 50 really for the last week or so, and just bouncing around waiting for these results. Again, with the low float, high short interest, this is a 39 million float, 15% short interest. And we'll have to see how these results do. But if they fail to impress, then I'm expecting it to see a breakdown, probably back towards that 80 level where the 100-day moving average is sitting.
Yeah, for sure. That gap from mid to early June, right around the $89 to $90 area, is going to be your critical line in the sand. Kind of also lines up with the uptrend off the April, May lows there, so you really want to keep this stock in the $90 area. If it starts slipping into the 80s, it could definitely take a dive much lower, so be careful with that one. But to the upside, like we said, low float, high short interest type of name, this thing could get back to $100 in a hurry.
Yeah, and just if you're wondering about that breakout, right around that time, the company saw a number of initiations by brokerage firms. I don't know why the coverage would have picked up so dramatically at that point, but
in June or May?
This would have been in June. They were initiated with a buy at D.A. Davidson, initiated with an overweight at J.P. Morgan, and initiated with a buy at Bank of America. One of the key things I point out, Bank of America's target with that buy was a 95. JP Morgan's target was 105, but then D.A. Davidson did have a $143 target on this. If you're curious, it's trading at about 24 times forward PE, so it's not outrageously priced, and price to sales is about 4.3. But obviously people are going to want to keep a close eye on this one, and I think that they need to beat, and hopefully no pictures from Oprah going in one direction or the other comes out while you're trying to trade it. But that promises to be one of the more active names out there. All right. So next up, we're going to take a look at Zillow Group. Scott, ticker symbol is ZG, which is funny because when I was looking at this one, I was expecting it to fall into that low float, high short interest realm, but it really didn't. I mean, the float's sitting at 180 million, and short interest is less than 2%. So not a lot in there, which I was a little bit surprised about. But obviously an online broker, so we'll get a little bit of an update on the housing market and what they're seeing out there. We had Redfin. I think, did Redfin report last week, or is that later on?
I don't think so. I don't think it reported yet.
They're going to be out on Thursday, I believe. So it could set up as a little bit of a precursor for Redfin as well. But Scott, have you ever traded Zillow in the past?
I think over a year ago, long time ago when it first made its debut, like maybe 2 years ago.
Well, the stock's pulled up back from its 52-week highs, but it seems to be finding some nice support right around this 100-day moving average in that 56.84 area, which is basically where it was trading at in its last earnings report.
Yeah, I don't have much of a read on this one. I would just say use that the low you just gave. I would even go a little bit lower and just round it down to $55. If it stays above 55, you're in good hands. If it starts slipping below 55, you got to be real careful.
All right. Next up, going to take a look at Crocs, which is in a pretty nice little steady upward trend here. Obviously, the maker of the Crocs footwear. Again, 66 million float, 14% short interest. Not to beat a dead horse, but and trading at 23.7 times forward PE. Just been riding that 50-day moving average higher, but it is running back up towards trying to break into the 20s to make something of itself there, Scott, to get above that 52-week high. Obviously, they're going to have to produce a pretty nice round of results in order to get back there, but I know this is the type of upward trend that you like over a longer term basis, so would you be a fan of the name here?
Yeah, I guess so. You know, I actually took the kids back to school shopping this weekend, and we picked up some shoes and sneakers for them. And Crocs actually had a pretty decent selection. It's not just the old like polyurethane type of sandals or whatever those things are called, clogs, I guess. They've actually started moving into a little bit more of a I guess the Skechers type of half sneaker, half slip-on type of shoe, and they look pretty comfortable. I think I tried one on just for like a loafer style, you know, just to see if it was worth it. And they're expanding. It's not just that like clog sandal type of shoe. So that explains why it's been going higher in my mind. And they must be selling something right. So yeah, it's an uptrend. It looks pretty solid. As long as that uptrend stays intact, say above $17, it looks okay.
All right, hey, just to break in, it looks, being told that the Teva weakness looks like they got an FDA letter. We'll see if we can find out any information on that, but that seems to be the concern about an approval for one of its generic drugs. So we'll continue to follow this story, but that's the early indication for Teva here. Okay. All right. Next up, I don't really know this name at all. It's a recent IPO that I know was, I saw on Momox Traders list, and one that I know you've talked about kind of setting up as a potential play out for the IPO that you like. That's Green Sky, ticker symbol GSKY. Basically, it's a payment solution provider. I wouldn't say that they're on line with Square. They seem to have a lot more to do with credit applications and some credit checks, background checks, things of that nature. But obviously they had that big pop right at the IPO. You know, they priced around 22, ran up to 27, and then summarily got rejected and knocked all the way back down to 1750. Wasn't able to find a lot on them or the reason why it got turned around so bad, but you know, it's having a pretty big pop ahead of tonight's earnings, that's for sure. Yeah,
I think there was a headline, Gavin, about them having some sort of deal with American Express.
Today?
Yeah, it came out earlier this morning. Let's see, today.
I didn't see that in our archives.
Yeah, it was on the wires early this morning at 8:16 Eastern, like an hour before the opening. American Express and Green Sky announced a strategic alliance to bring enhanced digital payments and financing capabilities to help merchants grow their business and give customers greater flexibility in financing their purchases.
That sounds like a marketing piece.
Yeah, I just threw all that off the top of my head, too.
There you go.
But I will tell you this, there has been somebody on feedback pretty much touting this one up the last 2 or 3 sessions, saying that we should be on our radar for a pop. And I was, it's been on my radar. It's an IPO that I track. It doesn't fit into the wheelhouse that I like to trade IPOs because it's below the IPO debut range underneath that $22 level. So for me, even though the downtrend is broken on this headline, I'd still like to see it get back over 22, even 24 before I really kind of feel more comfortable on the long side of this one. But kudos to that feedback person who's been writing in saying you need to accumulate it down below $18 over the last week. So
yeah, it was a nice call by that person for sure. So just to let you know, we do read the feedback and we do take the ideas seriously and go looking for ideas to pass along to the to the community. So appreciate any type of commentary we get from that.
Don't just pump and dump. The more details you give us, the better. Don't just
we've all been doing this for long enough that we could tell the pump and dumpers.
Yeah, don't just say look at green sky. At least give us a little bit something more to chew on. So anyway,
but okay. Next up, here's a name that I basically left for dead, but it's actually it's starting to look a little bit better recently. It's had a rollover ahead of these earnings. That's On Deck Capital, ONDK.
I don't know that.
Obviously, Lending Club is another name to keep an eye out on in this space. But it's one of those online lenders, Scott, where it's basically a community of lenders that'll pitch in and provide loans to other people. I guess would probably be the easiest way to explain it. But they've had a lot of issues, a lot of concerns with what kind of regulation will be placed around them in order to keep the books together. That led to some heavy selling in On Deck and Lending Club over the last few years. But all of a sudden, I was popping in just to see if this was even worth covering, and I saw that the stock nearly doubled between that 52-week low in early February to recently hitting a 52-week high, and that had me kind of curious. Obviously, a stronger jobs market certainly bodes well for a name like this, but certainly some strength. 71 million float. Only 5% of it's short interest, to be honest. I was expecting to see a little bit more of it short, too. Mm-hmm. But, just looking at it on the chart on a weekly pattern and everything, it's definitely working its way out from the basement.
Yeah, you have a 2-year base going on the stock pretty much between, say, $4 and $6. It recently broke out a few months ago over that $6 resistance, so you just wanted to stay above, say, $6 in response to earnings, and then maybe it has potential to clear the $8 resistance area. But you're basically saying this is like a crowdfunding loan shark
basically. Yeah.
business?
I don't know if loan shark is the proper terminology that I use, but it's not like the entire crowd run after you like The Simpsons or something if you don't pay back your debt. But yeah, basically it's more or less a crowdfunding sort of setup for lending out to individuals. So
that's an interesting business model.
Yeah, they find investors that are willing to put up their cash. Obviously, you're getting a little bit of a better yield. For a search for yield like we've been seeing over the past 10 years, this has basically been a nice steady return for some people that are willing to get in on that side of it.
Yeah,
Obviously, risk is associated with that, but the stronger the job market, the better a name like this theoretically should perform.
I guess so. I'll have to talk about that some other day about my questions, but because it's getting up against the close here. But it looks okay above $6.
Okay, and like you said, we are bumping up into the close. So, is any other names that you're looking out there?
Nah, like you said, Gavin, it's just kind of ham and eggers, really kind of that part of the business. Maybe MOS, which is Mosaic. That's the fertilizer stock. It's been doing pretty well here the last couple of months, trying to climb back up towards multi-week highs above $30. So I'd keep an eye on MOS.
Twilio as well. We didn't get a chance to discuss that one, but
another strong name.
The recent IPO that's launched back up towards those post-IPO highs here. So, again, we'll need to have a nice beat and raise. Another communication cloud play similar to PI here.
Yeah, just running through the calendar.
Also, one other one that is halted ahead of earnings, and that's here, which I know you've
Oh,
played.
HEAR?
Yeah,
Did they just halt that?
I see it's halted for earnings right now.
I didn't see it on the. I must have
We
just
don't have it on the calendar. Probably would have fallen below what we
the
usually
market cap
cover.
criteria. Yeah.
Yeah. So,
Um,
but they are halted for earnings here. So that's another one to keep an eye out on. And Scalp is more. Zillow's also halted for its earnings. So getting a couple of halts out here.
And
So
as you said last week, the halting usually doesn't mean a good thing, right?
usually not, but I mean, I was wrong with Take-Two, although I would argue that I was right for Take-Two. It's just the reaction was already priced in. So let me pop over and give these guys a hand posting some of these earnings here, Scott, and I'll jump back on if there's anything of interest that I'm seeing.
All right, cool. Thanks, guys.